Hello, guys. So we're going to review the uh, ticker KNDI today, the Kandi one. So today is a bullish day. As you can see, so the morning it opened, and then after the first 5 minutes, you can see that it boomed up. There is a huge volume. If you see that previous days, none of these days has such a volume. You can see by the start itself, you can see that there is a lot of people who are interested to buy. Whatever is the reason, we don't care about why it's news or some other reason. But you can see there has been some selling. The reason why is it closed in the middle. Okay, nevertheless, there is a strong demand in the background. That is, there is, when I say demand, it's buying, right? And then so the buying did not the buying sustained the selling. All this selling, this has been selling. If it had been all buying, in the bar would have closed around here, right? Again, so this happened. As you see, as it comes to a weak pullback, so as you see next, these bars, like these four bars, look at the volume comparatively is decreasing. Strong buying, and then when the people are trying to sell it, there is some profit taking. That is why you'll see that one. But nevertheless, a lot of people are still bullish. That is the reason why not a lot of people are still not selling yet. When you see that strong weak selling, this is another bullish factor. Okay, so this is how you need to read the charts. So once you see them, but still it just does not mean that you can start a trade here, take a long here, because it is nowhere near the support. Typically, if you take a longs or shorts just closer to the supports, you are taking a less risky position. Here, where is our support? Our support is this, the gray dotted line is my yesterday's low, and then the gray dotted pluses are my yesterday's high, and then blue dotted pluses are my today high, and then today low. So I always have those yesterday's and today's high and low in my charts automatically drawn, so that it's easier for me to read them. So these are typically key levels. When I say key level, it gets tested, and that's why I keep in mind when I do the day trading. Apart from, of course, there is a monthly, daily, monthly, weekly charts, support and resistance that I always keep. So, anyways, so coming back to the chart, right? So weak pullback is again what happens. See, as it starts coming up, buying appears here. Again, buying appears here. Again, buying. So see, as it starts going up, the volume is increasing, right? Because people are so bullish on this level. And you see this one, and then what happens next? So it broke the 2-day high with a strong volume. Look at the volume. Volume is very high. So this is all bullish. Still at this end of the day, at the end of this reading, right? There is not a very low risky trade yet. Very easy going on trade, but trying to understand is important, because you're understanding what is the background context. So this is all background now. Okay, and what happens now? So see, the weak pullback appears here. See my arrow here, and then the volume on this one. As it comes back here, the volume declines, and then when this starts declining, this is your support, right? Yesterday's high is your support, and then this is where you buy it, because typically yesterday's highs are more stronger than today's one. So this is why you buy this. This is the place which is a less risky place to buy. You buy this one, and then you can see that boom, boom, right? It comes back. Look at the strong volume that happens. But now see this bar. So this bar is almost double the volume of this one. However, it only moved the same length as this bar, meaning that there is some good selling happening. And what happens? See this, all this bars starts moving sideways. This is when you need to exit, because this is the first sign of a strong supply came in, right? So this is the first sign of supply, because typically, right, a first sign of supply is something that you can exit, or you can at least take a partial profit. But as it starts going sideways, right, meaning that buyers are no longer just in play, sellers are also in play. You don't want to be in the play when both of them are fighting. You get out of the fighting, as you can see. And the buyers got tired in this bar. You can see the volume, very low volume. And then look at the next bar. boom, almost double this volume, and then with an ink, and then it went up and then closed below. Then this is the supply. This is the strong supply that came in. So it's a good trade, if you have traded around 1050, so this is, sorry, 950 area. So if you have got bought around this area's 950 area, if you have sold it around like 1050, it's a 50 cents to no. So if you have even taken 1,000 shares, like, it would be like 500 profit. So it's a good trade. And so as you can see, the rest is as, so now supply came into the background here. What has happened, right? The reason why you took a long here is because the background conditions are bullish, and then the selling is weak, right? Whereas here now the background condition has changed. Now it's on changed the behavior from bullish nature to the selling nature. So that's why when it came back to this area, even though the volume has declined, you would not buy this one. Why? Because of this strong selling people, right? So you won't buy this one. As now your bias should be more towards a bullish nature. But see what happens as it starts going up, right? There is a good amount of buying actually. So this bar, see this bar, see these two bars, it's a good buying. See this bar, it's a good buying. And it just does not mean that, the it is not like a weak pullback like these bars, like where a supply has been done. So when the pullback has happened from the selling, the pullback is this one, right? So it starts going up, the buying is decent enough. I wouldn't say it is as weak as these down flow, but it's still a good one. That is being cautious. So, and then it tries to hold at this level, and then again goes up, and then tries to hold this level. So buyers has a good fight. That is the reason why I did not take a shot here at this level, even though I knew that there is a background supply. And had it had as it comes down, it tries to hold this for a level, and then had, let's say that if this had come up a weak pullback around this area, I might have taken a shot. But it never came to that area. But reading that and being cautious will provide you such opportunities at the edges. When I say the edges, this is an edge, this is not an edge, this is an edge. And when you read these things, you know when to exit. Even if you have taken a trade, a lot of people take trades basing upon the 50 moving average or 8-day moving average, all this stuff, right? Even if you know how to read these charts, if you've taken a trade, you know when to exit. Basing on this one, you would know when to exit. So that's all, guys, for today. Thank you.